Hey, what's up? It's Ben here. If you're a subscriber, you probably know that I talk about investing in stocks a lot. If not, and you just randomly came across my channel, you have probably heard of the stock market or investing in stocks at least once in your lifetime. If not, then today will be your first. This term, so common in the news or social media outlets, seems to be linked to a complex and distant system for some people. But in reality, it's not quite like that. It can easily be accessed by normal people like you and I, and you don't have to have thousands of dollars to invest. Couple of dollars will do nowadays. Now, some people dream of opening their own business, but building and maintaining a company is not easy. Depending on the business model, you'll need a lot of capital or time to keep a business running. But personally, you don't have to run a business to make money. You can let others run the business or company for you, and this is where the stock market could come into play. For companies, the advantage of participating in the stock market is to raise capital, and this is possible thanks to the stock market and investors. This allows people to acquire small bits of a company and become partial owners of it. Yes, you can become a mini owner even though you invest $1 in a company. You probably just own 0.0000001% of a company, but you can still consider yourself an owner of it. If you like the idea of becoming an owner or just wondering how the stock market works, then let me give you a quick breakdown of it that you may or may not know about. So what is the stock market? To start with the basic, it is important to understand that the stock market is an environment in which a company's shares are bought and sold. Each share or stock that you buy or sell is just a piece of a business, or in another way of thinking of it, like a really small piece of a whole pie. And buying a share makes you a small owner of the company. Therefore, as a small owner, you can make or lose money. And you might have heard of the famous saying, buy low and sell high. If you can do this right, you'll make money. With that in mind, let's talk about how does the stock market work. For a company to sell shares, it needs to go public on the stock exchange. This is a formal procedure in which the company must demonstrate that it meets a series of requirements. These rules are important for the stock market because publicly traded companies need to have an adequate administrative structure to conduct their business in a professional and a transparent manner. After going public and offering shares on the market, anyone can become a shareholder in the company. The company has to publicly share its results and financial statements on a quarterly and annually basis so that any shareholder or future investor is aware of how the business is doing. In addition to that, anyone who bought shares in a company or stock can later sell them if they wish to other investors. This is done in the stock exchange where people who want to buy meet with those who are willing to sell. If this sounds a little bit too confusing for you, let me break it down into three key elements. First, you have the initial public offering or IPO. When a company goes public, we can say that it divides its equity into small parts and offers them for the first time on the market to investors who are interested in buying them. When a company sells shares for the first time, the IPO, the investor buys the share and the company receives the money. This offer is only allowed when the company goes through the initial public offering. Note that this process can be very difficult and it could take a couple of months or a year to do. Then the company is free to offer its share on the market. But it first goes through the primary market. The objective of the IPO is to raise capital for the company by carrying out the initial public offering and making the shares available on the stock exchange. Negotiations are initiated. The money generated on the first transaction goes to the company directly. Therefore, in the primary market, there is a placement or launch of new shares. This means that the shares are coming directly from the company, and in the primary market, usually large institutional investors get first dibs on it because they are the biggest client of the bank or broker. Then you have the secondary market, which is just negotiations between investors. After the primary market has occurred, the company leaves the scene and the shares are traded among investors. Therefore, in the secondary market, shares or stocks are traded to investors sometimes as buyers and sometimes as sellers, and normal people like you and I can take part in this. Again, the company doesn't take part of any of the action in the secondary market. With that in mind, how do you make money in the stock market? In general, people profit in the stock market by appreciation. That is, they buy stocks at low prices and resell them at a higher price. For knowledgeable investors, it is also possible to make money from falling prices, but the potential loss could be greater if their prediction doesn't come out to be true. And this could fall under the category of high risk, high reward. The stock market goes up and down all the time, and it can allow investors to capture the uptrends and downtrends to make money. Generally, you have short-term investors or day traders using technical indicators and charts to identify potential price movement to try and capture on a stock's movement. They'll try to position themselves in the most appropriate way to generate profits, but a majority of the time they can get caught up with their own emotion and end up losing money if they don't exit a trade fast enough. On the other hand, long-term investors usually use fundamental analysis, that is, analyzing the company as a whole and gaining on their long-term growth. It's almost like a set it and forget it type of investing because they don't have to spend a lot of time each day looking at charts and indicators. I use this strategy the most because I like things to be passive and don't require a lot of time. But of course, everyone is going to be different. So overall, I hope you all now have a basic understanding of the stock market and how it works. You can make money and lose money in the stock market. And if you don't want to be on the losing side, then it's always good to do research and getting a good understanding of how things work. Once you do, take action and implement your research or your analysis to see what you know is true. This way you can get hands-on experience by doing. And that's why I make these step-by-step tutorials or explanation videos to help those who don't understand much about investing and to help them get started. And if you guys are looking to invest in the stock market, you'll first need to find a broker to start trading stocks. If you don't have one, consider checking out Webull, which is the one I use. I have a step-by-step video on how you can sign up with Webull and get started on investing. If you sign up, you'll get 2 free stocks that could be valued up to $1,850. All links are down below if you want to check them out. So I hope you like this video. If so, please give it a like and maybe consider subscribing for more stock related videos, and let's make some money together. I'll catch y'all later.